Welcome back to Out of the Rough. I'm here with Dan Kravitz. Dan Kravitz, the president of Kravitz Incorporated, co-author of Beyond the 401k, and a real expert when it comes to planning businesses 401k. And as a show Out of the Rough, really we want this segment to be how you as a small business owner can get out of the rough and into success. Or if you're an employee and you see this, you might want to offer it to your boss and say, look, here's a show that might help you long term in saving for your retirement. And of course, the employees always benefit. But let's talk. We talked a lot about qualified retirement plans and the cash balance plan. And when is a cash balance plan a good solution for small business?
You know, Fred, a small business owner earning, let's say, $250,000 or more per year, that cash balance can be a great solution for them to reduce their tax hit, increase their savings. Any small business owner looking to save more than $50,000 a year, cash balance is a great tool. The reason why I said $50,000 is in a 401k plan, the most you can put in is $16,000 or $22,000. If you add a profit sharing plan to that, it gets you to $50,000. And you know, $50,000 sounds like a lot of money, but if you're a 55-year-old business owner, and I see this many times, they haven't saved anything for retirement. Everything has been put back into the business. Even $50,000 a year won't meet their needs. So if you want to do more, cash balance is a great tool. Like I shared earlier, depending on your age, you can put up to $250,000 away into a cash balance and 401k profit sharing plan. So those are great examples. Any profitable business of any size, really, you know, should definitely consider qualified plans as a means to do some tax savings and some additional retirement savings. The number one user of this, like I said, is the small business owner, closely held businesses, family businesses.
That's the ideal candidate then.
That is the ideal candidate.
Yeah.
Profitable professional service companies, great candidates for cash balance plans.
Closely held businesses, CPA, law firms.
Yeah, absolutely. You know, older business, in terms of the ideal candidates, Fred, you know, older business owners looking to catch up. You know, if there's a couple of partners, each of them earning money such that they have disposable income, and a lot of times we'll see a small business, 2 or 3 owners with different situations. We might have the younger partner who's buying his way in, putting his kids through college, still paying off his house, has no disposable income. Cash balance is probably not the right vehicle. 401k would probably best meet his or her needs. But for the older partner, for that older business owner who has the disposable income, who's already put his kids through college, who is starting to wind down a little bit, that's where cash balance is a great choice. And,
yes.
and that older business owner is an ideal candidate for this product.
Yeah, I know you consulted our company some time back, and it was very good for me and my partner to be able to look forward and take some of those profits instead of giving them to Uncle Sam, because we paid plenty throughout the year, invest back into our future, because ultimately we're going to pay taxes on that money when we take it as retirement. What cash balance plan? How do you know it's a good situation for the business owner? How do you know it's the right plan for them?
You know, at the end of the day, Fred, the best way to know is to have a firm like ours design a plan for a small business owner. And what we do here at Kravitz is at no charge to the business owner, with minimal information. If we just simply know from an employee census what the dates of birth are for the owners and the employees, what their annual salary is, we can produce what we call a cash balance illustration. Mm-hmm. I know I provided you with a sample cash balance illustration, and what that illustration will show, it'll show how much can go in for each partner of the business or the business owner.
The 2010 maximum contribution limits.
Yeah, it'll show the maximum for the owner. It'll show precisely based on their age and their situation how much can go in for the owner into a 401k plan, into the cash balance plan, what their tax savings will be, and then we'll calculate the cost. And when I say cost, what I'm referring to is legally we'll have to give the employee something. So typically you'll see a typical example, and I think the example I sent you, you might see a few $100,000 go in for the business owners, and you might see maybe a few $1,000s go into the plan for the employees. And what we need to look at is how much money do we save in taxes? And so if I could save you $100,000 in taxes, I don't mind giving $10,000 to my employees.
Or even more. If you're saving, what a great retention tool.
Oh, it's a great retention tool. So not only can we design a plan that will reduce the business owner's taxes and help them accumulate savings for retirement. But you can use this to do all sorts of creative things. It's a great way to create profit sharing within the organization, a great way to attract and retain employees. The money that goes in for the employees can be subject to a vesting schedule that says you have to work for the small business owner for 6 years before they fully vest.
Creates loyalty?
Creates all sorts of loyalty. You know, the average employer spends about 2.8% of payroll on retirement. The average cash balance plan sponsor, the small business owner that has one of these programs, spends 6% of payroll on retirement. They spend twice as much. But the way I like to look at it is they're not spending money. They're actually investing back in their employees, investing back in the company, all at no expense. Remember what's paying for all this? The tax savings.
That you would have normally paid.
That you would have normally paid. Exactly, Fred. You know, oftentimes when we meet with a small business owner, typically we get 3 responses after we show them what this program can do. We say, A, why didn't I hear about this before? Is this legal? And, and it looked in. This looks too good to be true. Mm-hmm. Mm-hmm. And first off, Fred, just so you know, and so that the small business owners looking at this knows, it definitely is legal. We've been doing it for 33 years. Every plan that we write, we submit to the IRS for what's called a favorable determination letter. So as part of the setup, we actually get an individual letter from the IRS that blesses the plan before $1 goes into the program. The reason why you haven't heard about this before is, unfortunately, most advisors and most companies out there that sell retirement plans, you know, have a huge interest in getting hold of the investments. And an easy way to do that is through vehicles like 401k. Cash balance requires a unique expertise, so oftentimes people haven't heard of it, and it's not too good to be true. It is definitely possible to take the profit of your company and not give it to Uncle Sam in taxes, but give a little bit to our employees and set aside a bunch for ourselves.
You know, I think that's absolutely critical, especially during these tough economic times. You know, you hear currently the president talking about anybody that makes $250,000 or more is really rich and needs to be taxed more. That's been talked about or spoken about, and it's important that we look for ways. And I like the idea, and I really like the idea if that tax saving, that money would normally go to Uncle Sam, spreading it to the owner and to the employees.
Right, Fred.
I mean, that just makes all the sense in the world.
Yeah, and Fred, typically we find most accountants that have looked at this told us if 70% or the more of the money is going to the business owner or the partners that own the business, then the tax saving far exceeds the cost to run one of these plans. And oftentimes when we design a plan, and I think in the sample illustration that's up on the screen, 90% of the money in this example is going to the partners.
And that's the 210 maximum contribution limits.
Yeah, under these maximum contribution limits, you can see that you can save a significant amount of money into these plans. Assuming you're in the highest tax bracket, you can easily do the math and see, you know what, it does make sense to set up one of these programs, pay the cost, and avoid the tax hit.
So the first way is to contact your advisor that you currently work with and ask them if they work with Kravitz Incorporated. You're in Sherman Oaks studio. Sherman Oaks, correct?
Yeah, so actually, Fred, we have an office in Encino, California, and Los Angeles. We also have an office in New York, and we do business around the country. Because this is a unique product, Kravitz actually designs and administers more cash balance plans than any firm in the country. We work with
experts.
Yeah, experts in this, work with advisors all over the country. If your advisor is unfamiliar with this, feel free to give myself or someone at Kravitz a call directly, or visit our website, cashbalancedesign.com.
Cashbalancedesign.com. Kravitz Incorporated is in Encino in New York. The number here in Southern California?
Yeah, probably the best way to reach us is 877-CB-PLANS, or call me direct if you want, 818-379-6162. But definitely do some due diligence. Look at your website. Look at our website. Call your CPA. Call your advisor. Ask them about this. 9 times out of 10, they never heard of it. And more than happy to get on the phone with you and your advisors and help them understand the benefits of cash balance. It's not for every small business owner, but we find when it fits, boy, it adds a lot of value.
When the shoe fits, yes, you can run a long ways. Ladies and gentlemen, beyond the 401k, Dan Kravitz, president of Kravitz Incorporated, an expert when it comes to creating retirement plans for so many people throughout this great country of ours. And I hope you enjoyed this edition of Out of the Rough. And I'm Fred Arnold. If you would like to view this show, please log on to scvtv.com or fredarnold.com. If you have questions, email me, fred@fredarnold.com. And any questions you might have for Dan, I'll forward it to Dan. Until our next conversation, make it a healthy and prosperous day. And I hope this helps get you and your company out of the rut.